Is. Hey, hello ladies and gentlemen, James here. I'm making another video. This time, last one was pretty decent, but what inspired me to do this video, what I'm about to show you, and it's about black business and black wealth, is because no one ever told me, in my family, my friends, no one ever told me about certain things about business and commodities and wealth. And so I try to make a different positive aspect of it, and why I'm just doing it from a black person's point of view, because there's a certain demographic of people, which is African Americans, that don't really think too much, and it's not too many of us don't have awareness about it. And so I like to share something with, and maybe some people may not like it, but it is what it is. But I'm gonna make a couple videos here, and they're not really long. I usually do my combination of things, but I want to inspire somebody, an entrepreneur too, from walks of life, but especially black people. And I'm going to start with this one video. This one video is called Comedy Hype, called Why Blacks Don't Support Black-Owned Business. Here's why. We're going to go on from there.
After Advil dual action back pain.
What? My back feels better.
Before Advil. New Advil dual action back pain.
Most
Fights
people
back
need to
pain
know
two
about.
ways for 8 hours of relief.
For Hype Plus, I'm Tatiana LaJoy. Black-owned businesses are unprofessional. Many people in the black community have either said or thought this at one point or another. This statement stems from various experiences that ultimately lead to them spitefully banning black-owned businesses from their shopping, date night outings, or self-care expenditures. In 2021, the growth in black spending power reached $1.6 trillion, which doubled since the year before, yet our wealth has fallen by 14%. This means that 99% of our buying power is spent outside of our community. These statistics imply that black people know how to make money, but we do not know how to keep it. The black dollar stays in our community for 6 hours, while it stays in the Asian community for 28 days.
Well, it's actually a couple of things. For one, we could seem that we're rude and it's not all about good customer service.
That's a problem. Why am I spending my money with you and you're too sensitive to even take the criticism necessary needed? Areas that is so expensive. Which I can understand certain people or certain places, they kind of had you over at a price.
Hating. That's all I can think of is hating, just because of the fact that they see one person doing their thing, it's hard for them to congratulate them.
There has to be a reason why black-owned are the only businesses that are blackballed by their own community. You don't see this sort of attitude in other ethnic communities. Could it be because of systemic oppression, personal irresponsibility, deep-rooted psychology, or is it all of the above? Here's why black people don't support black-owned businesses. A common frustration among many African Americans is our constant appropriation of our culture. We are so proud of our culture because of everything it represents: strength, vitality, perseverance, and flavor. There is no denying that black is beautiful. But if we truly believe this, why do we not profit on our culture as much as other races do? One reason for this is because we lack trust within our community. According to supportblackowned.com, there are even black business owners that choose to not support black businesses. When asked why, they answer that black-owned businesses are unprofessional and no others besides theirs should be supported. But where does this unprofessional stereotype come from? Let's start from the bottom and determine what it takes to start a business. It takes a lot of effort to start a business, and it begins with market research. Market research involves gathering data to learn about target audiences so that a business owner can determine factors such as the demand, market size, and market saturation. Knowing these things can help a business develop a strong foundation so they can have growth and longevity. After that work is done, a business plan needs to be made, which is based on all of the market research that has been done. This plan can either be traditional, which is usually dozens of pages long, or a lean startup, which is typically about a page long. Next is figuring out the best way to fund your business by first determining how much you will need and figuring out which is the best method to get that money, whether that be through bank loan, crowdfunding, or investors. Depending on what kind of business you have, the next steps vary and include choosing a business name, structure, and location, and registering your business. This is the bare minimum to start a successful business, yet many Black businesses do not invest the time to establish a strong foundation for their company. One of the biggest complaints is that Black businesses are hard to find. This is a clear indicator that most of these businesses do not take enough time to do market research or organize their finances to allow for advertising budget. Advertising is important for businesses because it drives growth by targeting the right audiences and attracting paying customers. Getting customers is important, but keeping them is crucial. We live in a time where there is an abundance of small businesses and it's very competitive. Creating customer loyalty is the key to continued profitability for any successful business, and the best way to create customer loyalty is to have great customer service. This might be the biggest culprit of unsuccessful Black-owned businesses. Many customers complain about unprofessionalism, with stores being closed during business hours, business owners or employees with bad attitudes, and unapologetic bad service. Most Black people want to support Black businesses, but don't want to deal with the headache. At the end of the day, bad business is bad business, no matter where it's coming from. YouTube user at Natural Life wrote, "I desperately want to support Black businesses, but I can't. Case in point, I live in Metro Atlanta. There are Asian nail shops and Black-owned shops. I've gone to Asians mostly, but now I refuse to give them a dime of my money. I tried going to Black-owned, but they have no clue how to run a business. I go to an Asian shop. I'm in and out in an hour or less. Black-owned, I was in there 3.5 hours. Asians smile at me and ask, 'What color you like?' Black-owned roll their eyes and acted like I was bothering them. Very rude, gossiping with each other, cursing, etc. I just do my own nails now. I miss the Asian shop, but refuse. We do not understand how to run a business, many of us. Always running out of supplies, etc. My money is valuable to me. Treat me with respect and do a timely good service, and I will support your Black-owned business." This is not to bash our people, but more so to take ownership of what is lacking and how it can be improved. Black company owners have a tendency to put minimal effort into their company and expect to be treated like businesses that do put the effort in. In this era where being woke is very prominent, many Black-owned businesses will rely on being Black-owned as the main reason why they should be supported. When they aren't supported, defense is the first reaction when it should be an opportunity for introspection and growth. But let's also talk about the Black-owned businesses that have done the work. They know their target audience, they spend money on advertisement, and they have a solid business plan. But some of these businesses suffer based on the bad stereotypes created by the less successful Black-owned businesses. There are two theories that may explain this. One is the crabs in a barrel mentality that our community unfortunately adheres to. The Black community simply has more haters than other communities, and that's why there are no Black communities like Chinatown, Little Italy, or Little Russia. The reason being is most Black people come from poverty-stricken backgrounds and tend to glorify hood attributes, being gangsta, hard, etc. If you are an individual that wants to rise above the stereotype, most Black people will tear you down or ridicule you. There's many cases of Black parents being jealous of their own children. It hurts people to see others succeed because it shines a light on their own insecurities. They'll say things like, "You think you're better than me if you happen to be doing better than them because you worked for it." It's a slave mentality passed down through generations, epigenetics. Another theory is generational trauma. In his 1952 semi-autobiographical novel, Go Tell It on the Mountain, famous African-American author James Baldwin asked, "Could a curse come down so many ages? Did it live in time or in the moment?" The trauma of slavery has been carried on throughout generations of African Americans and is manifested through poor health and poverty. We are aware of the residual effects of slavery that we see in our community. A more recent example of generational trauma would be the riot of Tulsa's Greenwood District. In 1921, Tulsa, Oklahoma's Black Wall Street was one of the most successful African American communities in the United States. However, on May 31st, 1921, an African-American man named Dick Rowland was accused of attempting to rape a white woman named Sarah Page. The white community did not want to wait for the investigation to happen and instead took matters into their own hands by lighting 35 blocks on fire, injuring 800 people and killing 300. This tragedy resulted in 9,000 Black people becoming homeless and destroying a community with a remarkable school system, indoor plumbing, banks, hotels, and contemporary homes. The state of Oklahoma had only 2 airports, yet 6 Black families owned their own planes. The average income of African Americans in that community exceeded what minimum wage is today. Caucasians didn't realize that their segregation actually empowered us as a community. Since we were no longer able to shop at white establishments, the black dollar circulated in our own community and black businesses flourished. Josie Pickens records in an Ebony article that lower-class white people in neighboring areas were undoubtedly jealous of this affluent black community and felt the need to put progressive, high-achieving African Americans in their place. The financial power afforded to the black community could not save them from the racial hostility at the time. Whites resented the fact that blacks no longer passively accepted second-class citizenship in what they perceived as their land. The district newspaper would call the black community things like Little Africa and In-Town. They labeled them as bad ends who drank booze, took dope, and ran around with guns. They created a narrative that the black community was predisposed to crime and was in need of social control. This narrative helped them justify their actions of deadly violence towards the black community under a shield of reprimands. The newspaper even suggested that the KKK could help restore order in the community, which in fact, the agency behind their order was to suppress the power that they felt the black community did not deserve. Portraying blacks as criminals helped enforce a violent racist ideology. Following the riot, the mayor planned to redesign the community for industrial purposes. Essentially, it was a geographical problem because the government viewed that area as an ideal location for business expansion, so they brought down land prices and established white dominance in the area. Hannibal Johnson, author of The Black Wall Street, From Riot to Renaissance in Tulsa's historic Greenwood District, explains that neither the survivors nor their families ever received the reparations suggested by the Tulsa Race Riot Commission. In an interview on The Breakfast Club, founder and CEO of the Wealth Factory, Angel Smith, expresses how we have been robbed of our reparations. Blacks were defeated during this time to know that their beloved community was so fragile and their perceived power seemed fickle compared to that of the elite and lower class whites. Essentially, the black community was deboned by the white community, and that trauma still lives today. Is this why black businesses don't have a strong infrastructure today? Is there an inherent fear that any success we have can and will be taken away by envious people with more power? It wasn't just Tulsa. Race massacres also devastated communities in Georgia, Arkansas, Michigan, Mississippi, and Florida, just to name a few. As Martin Luther King put it, when Negroes assertively moved on to ascend the second rung of the ladder, a firm resistance from the white community developed. The black dollar circulating within our own community was a threat back then, and systems were put in place and narratives were spread to prevent it from happening again. That oppression is still relevant today and lives in our subconscious as a community. It's shocking how many people are unaware of the traumatic past of African Americans. This trauma is intergenerational and once realized can help combat the toxic patterns that we see in our community today, such as the crabs in a barrel mentality. As Jay-Z once said, crabs in a barrel, but crabs don't belong in the barrel. And they ain't never tell us that. So in the barrel, we're gonna act like we act. We can easily get out of the barrel if we stand on each other's back. Whoever gets on top, as long as they stay attached, they're gonna pull everybody out. I was doing just that. According to Angel Rich's research, it's going to take at least 250 years for us to catch up with our counterparts if we do not practice group economics. This is why it's so important to educate our people, especially our youth, on the importance of group economics to help close the wealth gap. Angel owns an app called Credit Rich to help people round up their spare change and intelligently optimize their credit score as fast as possible. There's also a directory called blackbusinessgreenbook.com where consumers can find black-owned brands from home goods to clothing and art, photography, and food. Black Nation is another app that can be used as a resource to find black-owned businesses wherever you are. These are just a few resources that can help keep our money within our community and make us stronger for generations to come. If we really want change, let's start by taking some of the actions mentioned throughout this video. Let us know in the comments below what you think.
At Lamps Plus, we believe your home should be a celebration
Now
of
you
you.
see,
And there has never been a better time to create your own.
As I stated in this series of videos that we're showing today, it's all about sabotage. Racism, white supremacy has always made sure to sabotage our progress to do for self. Not, beg, because you notice that we go big for food stamps, big for welfare. We can actually get that. But when we try to do for self, there's a section in the 10 precepts of slavery jurisprudence that calls powerlessness. And in that section, it says that we must keep them weak so we can be in control at all times. And that's what the sabotage is meant to do. Understand? If you can't do for yourself, and you have to depend on white supremacy for everything, you are weak. You have no strength. You have no power whatsoever. And that's why you are sabotaged and you are made to struggle more than anyone else, because the system was built off of you being at the bottom and anti-black hatred. So we look at it in the area of business owners. We talked about home ownership. We talked about how we're sabotaged with our children in schools. Now, black businesses are denied bank loans twice as often as white business owners. Now, they say that it's routinely happening. Even if you have a good credit score and consistent annual profits. They say more than any other racial group, black entrepreneurs more frequently hear no when going after business loans. So they say in one case is Freddie Lee James and his wife, Deborah, who started Freddie Lee's Gourmet Sauces in St. Louis back in 2010. Said the couple had a good credit score and $200,000 in annual yearly profits. Their barbecue sauce is currently sold in more than 1,000 retail stores. That is successful to get your sauce in more than 1,000 stores across the United States and Jamaica, including Home Goods, Schnucks, the Bergs, Straub, and Hy-Vee. Yet they can't qualify for a business loan. That is crazy. You showing that your product's successful. You're making at least $200,000 a year after taxes, etc., and profit, and yet you can't get a business loan. Now they say we have a 750 to 760 credit score, great credit score. We pay all our debts. He said we have no problems with that, but that they were saying the sauce business is not generating enough capital to their standards. Now, say according to the U.S. Federal Reserve statistics, black business owners are denied loans by banks twice as often as white business owners. In 2014, it's underneath Barack Obama, when data was last made available nationally, more than half of all applications for bank loans for black. This compares to about 25% of loan applications by white business owners in the same time frame. Now, let's talk about the Small Business Administration, the SBA, where you can go and get loans. Black people during Barack Obama only got 3% of the loans. George W. Bush, gave 9% loans underneath his presidency to black people underneath the SBA. That's sad, right? The supposedly first black president, and he only gave black people 3% of the loans. I guess that's some hope and change for you, right? So it said Deborah James, a sister, said that without bank funding, it's tough to expand business to achieve the bank's requirement for volume. She says it's impossible to reach the sales quota achieved by well-financed brands while working off a small business budget, according to the St. Louis Public Radio. She said to finance the business, a couple used $100,000 from Freddie Lee James's 401k. They went to Justine Peterson, a St. Louis microlender, for help. The nonprofit organization works with small businesses to help them improve their credit and qualify for loans. Now, a person by the name of Galen Godolphy stated that their senior loan officer and spokesman at the Justine Peterson said there were many business owners in the same predicament as the Jameses. St. Louis seemingly provincially lending struggles not only with entrepreneurs that don't historically look like them, but also the type of businesses that are unique to populations. They say for black entrepreneurs seeking basic financial opportunities, the fight continues. Now, this is the next step for a lot of black business owners. You need to, like that brother that have that sauce, if you can go to the continent and get your sauce over there and even open up a division over there, your money goes a lot further for one. And you can make so much more money actually on the continent, because it's over 1 billion people on the African continent versus the United States. So you can make some sauces that they can get down with. If you go study their spices and what they actually like and do your own research, you can make some money on the African continent, and it will not cost you so much capital to do so. You have to start expanding to the continent and getting people on the continent involved in what you're doing. Because once again, sabotage. They don't want to loan you anything because they don't want you and your wife to do for self. And this has been the constant issue with small business owners in the black community. We talk about starting businesses, and you should, but they make it so hard. Then if you don't start a business and you work for a company, it's a glass ceiling. You get all this education and still a glass ceiling. And then if you one of the lucky token black folks to make it to the top, you gotta shuck and jive. You gotta be an extremely safe black person. You better not say nothing about no black issue if you make it up there to the top, because you'll be out of there. So it's like you're messed up if you do, you're messed up if you don't. I'd rather go on the route of business anyway, but what we need to do and understand is make sure our businesses, he got his stuff in Jamaica, but make sure it becomes international. That's the best route to go, is international, a lot of this. Because when you go international, the American dollar goes a lot further in other countries than it goes here. But this is what black business owners, the sabotage that they deal with, and this is what I want to talk about. Every area in society, we are constantly sabotaged. We're getting capital for businesses, schools, home ownership. We try to get, even when we do finance something, they charge us higher interest rates because we're black. We get longer jail sentences than our white counterparts. I mean, we go through it in this country. And when I say the term Captain Black America, it's because what are you saying to any of this? No law gonna fix it, and reparations not gonna fix it. That's deep ingrained into this country. And we have to accept that as black people. And we have to say we are changing direction. Look, you could have it. Well, we gonna do what we do here, and that's fine. But we can take our talents elsewhere. You can still do some things here, but understand there's gonna be some limitations here for you being black. I'm sorry, it is. I don't care how educated you are or whatever. There's gonna be some limitations. Now, some of us may make it, and that's far and few in between. There's not too many Jay-Z's coming or Akons or whatever coming out of America like that.
Exactly.
It's not designed for us to come up like that.
Exactly.
But the thing is, I'm not saying look down and think we can't make it and whatever. No, just understand that the only way we actually could make it is we would practice group economics like Dr. Claude Anderson told us to do. That's the only way to work, because we can't be individuals. We can't. Like other groups that come to this country, they're not individuals. They work together.
Right.
All this separating and being apart doesn't work. But together, we can do it.
Exactly.
Even on my end, I try to work with other people in this space, other content creators. And I'm trying to work with people, bringing them, new people into the platform that you will see. As I'm trying to, expand myself. I don't have access to loans like that at all. That's why it's extremely important, and I'm going to start reiterating this. It's important that you support, your media outlets that you have that give you news and information. On our Patreon page, we have been trying to get 3,000 members. At least one person told me, say, man, you haven't got that 3,000 members yet? And I'm like, yeah, it's crazy. I have all these people watching, have all these subscribers, but we still haven't gotten 3,000 members. We got over, I think right now, maybe 1,200 members. And if we had fully 3,000 members that say, yes, I can donate, $2 to $5 a month or more, whatever you choose, to the platform on Patreon, that way we can hire people, because that's why I'm at with it now. We need to hire people so we can get more content out, because we are lacking. We need to bring in more contributors, but you got to bring in people that you can pay. You can't just have people say, yeah, I'll do it. No, because it's your time. It's your energy. It's things I need you to do. And you got to be paid for it. It can't be free. I don't believe in free 99 with anybody. You have to be paid for, if anything else, your time.
Right.
Because your time is worth something. Like you go to your job, they pay you for your time.
Right.
Whatever you make per hour.
Right.
So what we're saying is help us get to that 3,000 members on our Patreon page. We work very hard to try to put out news and information. A lot of people, say they like what we do here, but if one day is not here anymore because we don't have the funding, I got burnt out, because that happens with me at times. I get burnt out, And when I get burnt out, I need to back off. I don't need to not do content for a week because I'm burnt out. I should have other contributors here that's constantly giving you the news, constantly, so nothing stops if I get burnt out. We gotta bring people in, but the only way we can bring people in unless the people support us on avenues like Patreon. Like I said, we get out 3,000 members, we can hire some people, and that'll make life.
I won't leave it at that, but I'm gonna go to this next video, and it's gonna be some encouraging news, and it's gonna give you. And if you're a black person on a small business or big business or any person, but I want to encourage you because this will motivate you to see other people look like you do it.
Welcome to our Top Black-Owned series, where we celebrate and highlight the achievements of businesses that empower and uplift their communities. In this episode, we dive into the world of finance and showcase the top Black-owned banks. Join us as we explore the stories behind these remarkable institutions that are making a significant impact on economic equality and providing financial opportunities for all. One United Bank. Our first stop takes us to One United Bank, which established in 1968. It has emerged as the largest black-owned bank in the United States, dedicated to providing equitable economic access to lending and banking services for Boston's black residents. Led by Kevin Cohey and Terry Williams, the bank has experienced a remarkable transformation and expanded its presence, now operating 3 physical branches and maintaining a robust online platform. With a strong emphasis on serving the black community and promoting financial literacy, One United Bank has garnered corporate support and witnessed substantial growth in new accounts. Its technological prowess, unapologetically black identity, have resonated with customers from diverse backgrounds, while the bank actively encourages allies to join and contribute to their mission of empowering the black community financially. Broadway Federal Bank. Next up is Broadway Federal Bank, which is founded in 1946. Broadway Federal Bank is a community-focused bank headquartered in Los Angeles, California. As the last remaining black community-oriented bank west of Dallas, it has been dedicated to serving minority communities that were overlooked by other financial institutions. Broadway Federal Bank's mission is to provide banking services to low to moderate income communities, with a particular emphasis on lending for multifamily housing. Led by President and CEO Wayne Kent A. Bradshaw and Chairman Virgil Roberts, the bank offers a range of residential and commercial real estate loan products, deposit products, and other loan services, upholding its commitment to community service and empowering minority communities in the Los Angeles area and beyond. Carver Federal Savings Bank. We then encounter Carver Federal Savings Bank, which is established in 1948. Carver Federal Savings Bank is the largest black-owned financial institution in the United States. Recognized as a Community Development Institution, CDFI, by the U.S. Treasury Department, the bank was initially founded by M. Warren Weston, with a focus on providing mortgages to black homeowners and training future banking professionals. Over the years, Carver Federal Savings Bank expanded its branch network, underwent a merger with Allied Federal Bank, successfully defended against a takeover attempt, and acquired Independence Federal Savings Bank. Transitions in leadership, including current CEO Michael T. Pooh. The bank remains headquartered in Harlem, New York, and is dedicated to community development and supporting home ownership through its financial services. The United Bank of Philadelphia. Our journey continues to the United Bank of Philadelphia, which founded in 1992 by Thomas C. Chappelle. The United Bank of Philadelphia has become the sole African-American owned bank in the city, driven by a mission to enhance banking services in historically and underserved neighborhoods. Chappelle's leadership as chairman, president, and CEO until 2000 laid the foundation for the bank's commitment to community empowerment and financial access. The United Bank of Philadelphia strives to be the preferred hometown bank, emphasizing community development and personalized services in the greater Philadelphia region, with a focus on meeting the needs of blacks, Hispanics, Asians, and women. By providing financing opportunities to small businesses and driving economic inclusion, the bank aims to reduce poverty, foster economic growth, and contribute to the overall success and prosperity of businesses in their community. First Independence Bank. Another Another notable destination is First Independence Bank, led by CEO and Chairman Kenneth Kelly. It's a prominent Black-owned financial institution operating in Michigan and Minnesota. Through strategic partnerships and Kelly's involvement in banking boards and associations, the bank has expanded nationwide, positively impacting the community it serves, offering competitive checking accounts with benefits like free overdraft protection and discounts. First Independence Bank addresses the racial wealth gap and provides essential financial services to Black communities. The institution prioritizes customers' financial wellness and has implemented initiatives like an online financial wellness series in partnership with Mass Mutual Great Lakes. With an A+ rating from the Better Business Bureau, First Independence Bank demonstrates its commitment to customer satisfaction and making a meaningful difference. Citizens Trust Bank. Citizens Trust Bank holds a prominent position among Black-owned financial institutions. Citizens Trust Bank has a rich history of providing essential financial services to Black-owned businesses and institutions in Atlanta and beyond. Founded in 1921 with the goal of establishing an independent banking institution for Black businessmen, the bank has achieved notable milestones, including being one of the first to reopen during the 1933 bank holiday and becoming the first Black-owned bank to join the Federal Reserve Bank in 1948. Under the leadership of influential figures like Lorimer D. Milton and Owen Funderburk, Citizens Trust Bank has expanded its reach, becoming a leading Black-owned commercial bank. Despite challenges such as the 2008 financial crisis, the bank remains dedicated to its mission of serving the Black community, actively supporting minority-owned businesses and providing financial services to underserved communities, contributing to the economic empowerment of Black Americans. Liberty Bank and Trust Company. Our journey takes us next to Liberty Bank, the largest Black-owned bank in the U.S., has made a significant impact under the leadership of Alden McDonald Jr. Founded in New Orleans, the bank has expanded across 11 states and now holds over $1 billion in assets. McDonald Jr., the bank's founder, passed on his legacy to his son, Todd McDonald, who continues to lead with compassion and empowerment. Liberty Bank started as a small institution and grew to provide vital financial support to Black individuals when mainstream banks were hesitant. McDonald Jr.'s compassionate approach and Todd McDonald's commitment to their vision ensure that Liberty Bank continues to positively impact communities while upholding principles of dignity and respect for all customers. The Mechanics and Farmers Bank. Founded in 1907 by a group of African-American businessmen, the Mechanics and Farmers Bank has become one of the most influential Black-owned businesses in North Carolina. With its headquarters in Durham and a branch in Raleigh, the bank has played a vital role in supporting the African-American middle-class community by providing loans for home construction, education, and more. Despite the challenges of the Great Depression, M&F Bank showed resilience and remained one of the few African-American banks to survive. Throughout its history, the bank has remained dedicated to serving marginalized communities, addressing the racial wealth gap, and promoting financial literacy. Offering specialized services and products, M&F Bank continues to be a trusted institution within North Carolina's Black communities. City First Bank. Our penultimate destination is City First Federal Bank, which is a prominent Black-owned bank with branches in Los Angeles and Washington, D.C. that focuses on serving the needs of the Black community. The bank actively addresses the racial wealth gap by supporting affordable housing projects, nonprofit organizations, and small businesses in low to moderate income areas. Recognized for its social and environmental impact, City First Bank holds certifications that highlight its commitment to operating ethically and contributing to a more equitable society. While their money market account may not be the most competitive, the bank offers solid personal checking and savings account options. Through its dedication to financial inclusion and empowerment, City First Federal Bank is making a positive difference in the communities it serves. Industrial Bank. Lastly, we encounter Industrial Bank, one of the leading Black-owned banks in the United States. Stands out for its commitment to promote economic empowerment within the Black community. Founded by B. Dwell Mitchell Jr., the bank offers a range of tailored products and services, including Kasasa accounts with attractive interest rates and cashback rewards, distinguishing itself from other financial institutions. Under Mitchell's visionary leadership, Industrial Bank has prioritized financial literacy initiatives and played a crucial role in supporting the Black community. Notably, the bank launched a financial literacy program for incarcerated individuals in Washington, D.C., provided substantial financial support during the COVID-19 pandemic with disbursement of over $23 million in Paycheck Protection Program loans to 255 businesses. Honorable mention: Wells Fargo, although not a black-owned institution, has pledged to invest up to $50 million in black-owned banks. As part of this commitment, the company is providing equity investments and support to minority depository institutions, MDIs, that serve predominantly low to middle income communities. By working closely with MDIs and offer financial and technical expertise, Wells Fargo aims to promote the economic growth and well-being of these communities. As we conclude our exploration of the top 10 black-owned banks, we hope you've been inspired by their commitment to empowering their communities. If you found this video informative and want to show your support, don't forget to like, subscribe, and leave a comment below. By doing so, you'll join us in fostering economic growth, creating opportunities, and uplifting the black community. Thank you for joining us on this journey, and stay tuned for more empowering content in our Top Black-Owned series.
My next one is going to give you some ideas, and it's something that we in the most black people don't know about this. There's only a certain percentage of us that do, but it's going to tell you no more about security. This next video is going to give you what your other counterpart's been doing, and you don't even know about it, and some of us don't have the knowledge of it. I just recently started doing it myself and putting commodities to the side, and that's why there's certain channels on YouTube, different individuals I watch to learn about the stock market and these little cryptos and things like that, and metals. But I'm going to show you the video, and this is very important. It's about access. Your access. If I said that right,
Who has 250 trucks in stock? Chillicothe truck. Who has 150 diesels to choose from? Chillicothe truck. Who has the best selection?
This is for the black and for the smart people. You gotta think about your future. If you want to survive, this is what you gotta do.
Who has all the... So invest in ETFs that track the performance of a basket of commodity.
Let's go back.
Imagine you have $10,000 in cash sitting in your bank account. You think you're being smart and safe by keeping your money in cash, right? Wrong. In fact, you're losing money every day without even realizing it. How? Because of inflation, devaluation, theft, and other risks that can destroy your cash and your wealth. That's why you need to watch this video until the end, because I'm going to show you 10 assets that are better and more secure than cash. These assets can help you protect your money from losing value and even grow it over time. Trust me, you don't want to miss this. So grab a pen and paper and get ready to learn how to protect your cash like a pro. So, subscribe to the channel and let's get started. While cash is convenient, it may not be the best solution for long-term financial security. Furthermore, with the rise of digital banking, cash is no longer the only option for financial security. There are a variety of alternatives to cash that can provide higher returns and greater protection against inflation. From investments in stocks, bonds, and mutual funds to savings accounts and CDs, there are numerous options available today for those looking to make their money work for them. Let's look at various alternatives that can both protect your cash and potentially provide higher returns. The first asset we have is safe haven currencies, an asset class that acts as a store of value during times of economic uncertainty. Imagine you are in a stormy sea and you need a lifeboat to keep you safe. That's what safe haven currencies are like. They are the currencies that people trust and use when the markets are in turmoil. Some of the most popular safe haven currencies are the US dollar, the Swiss franc, the Japanese yen, and the euro. These currencies have strong economies, low inflation, and stable politics behind them. When things get rough in the markets, safe haven currencies can help you protect your wealth and avoid losses. They tend to go up in value as people sell their risky assets and buy more of these currencies. This means you can keep more of your money and hedge against market volatility. Additionally, safe haven currencies also have other advantages. They're easy to buy and sell because they are widely used and traded around the world. They also give you a sense of security and stability because they are backed by solid economies and financial systems. Do you want to keep your money safe when the markets are shaky? Safe haven currencies can help you protect your money and avoid losses when things get rough in the markets. They tend to go up in value as people sell their risky assets and buy more of these currencies. This means you can keep more of your money and hedge against market volatility. But how do you invest in safe haven currencies? There are different ways to do that. You can use foreign exchange platforms or currency ETFs to buy and sell these currencies. Two examples of respected and trusted foreign exchange platforms or currency ETFs to buy and sell these currencies are Owanda. This is a foreign exchange platform that offers low spreads, fast execution, and access to over 70 currency pairs. It also provides advanced trading tools, market analysis, and educational resources. Owanda is regulated by multiple authorities, such as the U.S. Commodity Futures Trading Commission, CFTC, and the UK Financial Conduct Authority, FCA. On the other hand, we have Invesco DB US Dollar Index, Bullish Fund, UUP. This is a currency ETF that tracks the performance of the US dollar against a basket of 6 major currencies: the euro, the Japanese yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. It aims to replicate the movements of the US dollar index, DXY, which measures the value of the US dollar relative to other currencies. UUP has low fees, high liquidity, and exposure to the most widely traded currency in the world. Another way to invest in safe haven currencies is to follow what some notable investors and institutions do, such as Ray Dalio, the founder of Bridgewater Associates, one of the world's largest hedge funds. Ray Dalio has stated that he likes to diversify his portfolio with safe haven currencies, such as the Swiss franc and Japanese yen. He believes that these currencies can help him balance his risk and return in various scenarios. Did you know that the Swiss franc significantly strengthened during the 2008 financial crisis? Many investors saw it as a safe haven, and those who had invested in it correctly gained handsomely. It's a perfect example of how safe haven currencies may act as a buffer during stressful times. Let me ask you a question. Can you think of any other assets that are not directly related to cash but still hold significant value? Consider it for a moment and let me know in the comments area below. Investing in safe haven currencies carries risks like any other investment, such as global economic conditions, geopolitical events, and interest rate differences impacting the currency's strength. Therefore, you have to do your research and analysis before you invest. Now that we've covered safe haven currencies, let's move on to the next of the 10 assets that can be more secure than cash: goods money. An example of an asset that is not directly related to cash, but still holds significant value is goods money. Have you ever thought of investing in something other than cash or stocks? Something that has real value and can be used to buy and sell things? If so, you might be interested in learning about goods money. Goods money is a type of asset that consists of physical goods that people want and need. For example, metals like silver, copper, and platinum are goods money because they are used in many products and have a limited supply. Other examples are oil, natural gas, and agricultural products, which are essential for energy and food. One of the advantages of goods money is that it protects you from inflation and currency fluctuations. When the value of paper money goes down, the value of goods money goes up. This means you can preserve your wealth and purchasing power. Another advantage is that goods money is influenced by global events and trends, such as industrial demand, political conflicts, and environmental issues. Do you want to invest in goods money? If so, you need to do your homework and keep an eye on the factors that affect commodity prices. Let's take a look at some of the main types of goods money and what drives their value. First, we have precious metals like silver, gold, and platinum. These metals are shiny, scarce, and useful for many things. They have been used as money and as a way to store wealth for a long time. Their value depends on things like how the economy is doing, what's happening in the world, and how investors feel about them. Next, we have industrial commodities like oil, natural gas, and coal. These commodities are important for running industries and growing the economy. Their value depends on things like how much people want them, how much is produced, what's going on in the countries that produce them, and...
You know you should be planning for the future. But savings accounts suck. And investing can be scary. At Ground Floor, we believe
believe there's a better way. Our product offers easy access to the savings account with the real returns of investing. And what kind of new energy sources are available? Finally, we have agricultural products like wheat, corn, soybeans, and coffee. These commodities are essential for feeding people and animals. Their value depends on things like how the weather is, how much is produced and consumed, what the government does, and what people like to eat and drink. Investing in goods money can be done in different ways. Some investors use ETFs that follow commodity prices, while others buy physical commodities or futures contracts that let them buy or sell them at a certain price and date. However, investing in goods money is not without risks. Commodity prices can change quickly and unpredictably due to various factors. That's why it's important to spread your investments, stay updated on market trends, and get professional advice when needed. Goods money can offer you a chance to diversify your portfolio and take advantage of the natural value of physical goods. One example of a famous investor who had invested in goods money is John Templeton. Templeton was one of the past century's top contrarians who bought low during the Great Depression and sold high during the internet boom. He created some of the world's largest and most successful international investment funds, which included commodities such as precious metals and oil. He was knighted by Queen Elizabeth II for his many accomplishments. Templeton believed that investing in goods money offered portfolio diversification and protection against inflation and currency devaluation. However, goods money is an alternative asset class that can offer you diversification, protection, and growth opportunities. If you are looking for a way to spice up your portfolio and hedge against uncertainty, you might want to give goods money a try. Let us now shift our focus to the next asset that is better than cash and explore how these can protect your money: industrial commodities. Are you looking to invest in something essential to many industries that can help you benefit from global growth? If so, you may want to consider industrial commodities. These are goods used to manufacture cars, electronics, buildings, and energy, among other things. Some examples of industrial commodities are copper, aluminum, zinc, iron ore, and crude oil. These goods are in high demand in many parts of the world, especially in developing countries that need them for their economic development. Investing in industrial commodities can give you several benefits. First of all, you can get exposure to the global economy and how well it is doing. When industries grow and need more commodities, the prices of these goods can go up, giving you a chance to make money. Second of all, you can diversify your portfolio and lower your risk. Industrial commodities often behave differently from other assets like stocks and bonds. This means they can balance out your portfolio and protect you from market volatility. On the other hand, many smart investors and organizations know the value of industrial commodities and invest in them regularly. For example, big investment firms and hedge funds often put some of their money in commodities to profit from price changes and global economic growth.
It gives dividends.
There are different ways to invest in industrial commodities. You can buy commodity futures contracts, which are agreements to buy or sell a certain amount of a commodity at a specific price and date. You can also invest in ETFs that track the performance of a basket of commodities. For example, you can invest in an ETF that tracks the performance of a commodity index, such as the S&P GSCI or the Bloomberg Commodity Index. These indices measure the price movements of a group of commodities, such as energy, metals, and agriculture. Or you can buy stocks of companies that produce or distribute industrial commodities. But you should also know that investing in industrial commodities has risks. The prices of these goods can change quickly and unpredictably due to various factors. These include how much people want and produce them, what's happening in the world, what kind of new technologies are available, and what the government does. That's why you need to be well informed about market trends, watch supply and demand carefully, and look at the big picture of the economy when you invest in industrial commodities. Investing in industrial commodities can give you a chance to profit from the growth of important market goods. But you need to be careful and smart about your investment choices and manage your risks well. Jim Rogers, a well-known investor, is known for his trust in the long-term potential of industrial commodities. Throughout his career, He has made profitable investments in commodities and feels that they are an important component of a well-diversified portfolio. Roger's experiences serve as a source of inspiration for investors looking to gain exposure to the volatile world of industrial commodities. By the way, if you're enjoying this video so far and want more content like this, comment the word "more" so I know. The next of 10 assets that can outshine cash in terms of security and returns: real estate investment trusts, REITs. Are you interested in investing in real estate without having to buy and manage properties yourself? If so, you may want to consider investing in real estate investment trusts, REITs. REITs are companies that own and operate various types of real estate and generate income. These can include apartments, offices, malls, hotels, and even cell towers and data centers. One of the main advantages of investing in REITs is that they can give you regular income from dividends. Dividends are payments that companies make to their shareholders from their profits. Dividends are usually paid quarterly or annually, and they can vary depending on the company's performance and policies. Here is an example to explain how a company pays dividends to its shareholders from its profits. Alice is an investor who owns 100 shares of XYZ Inc., a company that owns and operates several shopping malls across the country. XYZ Inc. is a REII that pays quarterly dividends to its shareholders from its rental income and other sources of revenue. One day, Alice receives a letter from XYZ Inc. informing her that the company has declared a dividend of 50 cents per share for the last quarter. This means that Alice will receive a dividend payment of 100 times 50 cents equal to $50 from the company. Alice is happy to receive this dividend as it represents a part of the company's profits that is distributed to her as a shareholder. She can use this dividend to pay for her expenses, save for her future, or reinvest in more shares of XYZ Inc. Alice decides to reinvest her dividend in more shares of XYZ Inc., as she believes that the company has a strong business model and growth potential. She uses an online brokerage platform that allows her to automatically reinvest her dividends without paying any fees or commissions. By reinvesting her dividends, Alice increases her ownership stake in XYZ Inc. and benefits from the power of compounding. She hopes that the company will continue to pay and increase its dividends over time, as well as appreciate in value. Alice enjoys being a shareholder of XYZ Inc. as she receives regular income from dividends and participates in the success of the company. Overall, dividends can be a source of passive income for investors who hold REITs, helping them to reinvest their earnings and compound their returns over time. Additionally, dividends can also signal the financial health and stability of a company, as well as its commitment to rewarding its shareholders. However, dividends are not guaranteed and can be cut or suspended by the company if its profits decline or if it faces financial difficulties. The taxation of these dividends can also vary depending on the type of REIT and the investor's tax situation. Therefore, it is important to understand a REIT's dividend policy and history before investing in it. Additionally, REITs can help diversify your portfolio as they usually invest in many properties across different sectors and locations. This can help you reduce your risk from a single property or market. You can invest in REITs through two ways: public REITs that trade on stock exchanges, or private REITs that are only for qualified investors. You should always check the performance, management team, and real estate assets of a REIT before investing in it. Some famous investors like Sam Zell and David Simon have made a lot of money by investing in real estate and REITs. They have shown how to get high returns by buying, running, and selling properties at the right time and place. Moving on to the next asset that is better than cash, this asset has grabbed the imagination of people for centuries: gold and other precious metals. Have you ever wondered why some investors are obsessed with precious metals? These shiny substances have a long history of attracting people with their value, rarity, and ability to protect wealth in times of trouble. Gold is the most famous of these metals, and for good reason. It has been used as money for thousands of years and has shaped the course of civilizations. But gold is not the only precious metal out there.
Some people recruit, MLM. Some people sell other people's products.
But gold is not the only precious metal out there. Silver, platinum, and palladium are also valuable and sought after by investors. Precious metals are like a shield against the storms of the economy. When inflation, currency crises, or political turmoil threaten to erode the value of other assets, precious metals tend to hold their ground or even rise in price. This is because they have a limited supply and a strong demand around the world. If you want to join the ranks of precious metal investors, you have several options. You can buy physical metal in the form of bars or coins and store it somewhere safe. You can also invest in funds that track the prices of these metals or buy stocks of companies that mine or produce them. But before you dive into the world of precious metals, be aware of the risks involved. The prices of these metals can fluctuate depending on various factors such as global events, interest rates, and market sentiment. Also, if you own physical metal, you have to pay for storage and insurance costs. Precious metals are not a guarantee of profit, but they can be a valuable addition to your portfolio. If you are thinking about investing in gold and other precious metals, you need to do your homework. To put it simply, you need to watch the market trends and figure out how these assets fit into your overall portfolio. Gold and other precious metals are not just shiny objects. They are powerful tools to protect your wealth from economic uncertainties. They have a long history of being valuable and scarce, and they don't lose their purchasing power like paper money does. But investing in precious metals is not a sure thing. You have to be aware of the market conditions and the risks involved. One of the most outspoken advocates of gold investing is Peter Schiff, a stockbroker and financial commentator. He believes that gold is on the launch pad and will soar to new heights in the current and upcoming years. He thinks that inflation is going to get worse, not better, and that the Fed will not be able to raise interest rates enough to fight it. He also thinks that the U.S. economy is weak and will face a recession or worse. He advises investors to buy physical gold or funds that track the prices of precious metals or even mining stocks. Schiff is not alone in his bullish view on gold. Nigel Farage, a former politician and broadcaster, also believes that gold will be the best investment to make. He agrees with Schiff that inflation is a major threat and that the Fed will not be able to control it. He also sees geopolitical risks and currency crises as factors that will drive up the demand for gold. Of course, not everyone agrees with Schiff and Farage. Some analysts think that gold prices will fall or stagnate this year and the next, depending on various factors such as global events, interest rates, and market sentiment. They also point out that owning physical gold involves storage and insurance costs, and that mining stocks are subject to operational risks. The bottom line is that investing in gold and other precious metals requires careful research and analysis, as well as a clear understanding of your goals and risk tolerance. Precious metals can offer you a way to preserve value and hedge against economic uncertainties, but they are not a guarantee of profit. You have to weigh the pros and cons of each option and make an informed decision based on your own situation. Let us now switch to the next asset, which is better and secure than cash. This asset type has the potential for both income and growth. Dividend stock funds. Imagine you are a part owner of several successful companies. Every quarter, these companies send you a check for your share of their profits. That's what dividend stock funds can do for you. They are funds that buy stocks of companies that pay dividends. Dividends are cash payments that companies make to their shareholders from their earnings. Furthermore, dividend stock funds can give you a regular income from your investments. They also let you invest in a variety of quality companies that have steady earnings and a history of paying dividends. These companies are usually well established and have stable businesses. They are often in industries like utilities, consumer staples, financial services, and healthcare. You can invest in dividend stock funds through mutual funds or ETFs that focus on dividend-paying stocks. But you have to watch out for the risks involved. The prices of dividend-paying stocks can move up or down depending on the economy, the industry, and the company's dividend policy. You also have to consider the fees and taxes that can reduce your returns. For example, Let's say you invested $10,000 in a dividend stock fund that holds 100 stocks of different companies. The fund has an annual dividend yield of 4%, which means it pays $400 in dividends per year for every $10,000 invested. The fund also has an annual expense ratio of 0.5%, which means it charges $50 per year for every $10,000 invested. Assuming the fund's price remains the same, your net return after 1 year would be $350, calculated as $400 minus $50. However, if the fund's price increases by 10%, your net return would be $1,350, calculated as $400 plus $1,000 minus $50. On the other hand, if the fund's price goes down by 10%, your net return would be a loss of $650. The final calculation is $400 minus $1,000 minus $50. Additionally, you may have to pay taxes on your dividends and capital gains, depending on your tax situation. Let us now get into the world of government bonds. The next asset better than cash. This is an asset class that provides stability and income to investors. Government bonds are debt securities issued by national governments in order to raise capital. These bonds are considered as one of the safest investments because they are backed by the issuing government's complete faith and credit. Government bonds are less volatile than stocks, making them a great way to bring stability to your portfolio. Additionally, fixed interest payments can provide a consistent income stream. When investing in bonds, however, it is important to consider inflation and interest rate concerns. Legendary investor Bill Gross, known as the Bond King, made his fortune through successful bond investing. His talent in studying and trading government bonds has made him one of the most successful investors in the fixed income market. Let us now explore the next of 10 assets that may be better and more secure than cash. Cryptocurrencies. This asset class has received immense popularity and media attention in recent years. Cryptocurrencies, such as Bitcoin and Ethereum, are digital assets that use cryptography to safeguard transactions and manage the generation of additional units. They provide decentralization, transparency, and the potential for high rewards. While cryptocurrencies have seen substantial volatility, they have also provided spectacular gains for early users. Investing in cryptocurrencies takes careful consideration because it is a rapidly developing and complex sector. Elon Musk is one of the most well-known investors who has embraced cryptocurrencies. He invested $1.5 billion in Bitcoin through his firm Tesla and advocated for its adoption. This move not only increased the value of the cryptocurrency, but also cemented its presence in the financial scene. Now let's explore an asset that's better than cash. This asset class goes beyond mere protection and aims to thrive in the face of adversity, anti-fragile assets. Do you want to invest in assets that not only survive but thrive in chaos? Then you might want to consider anti-fragile assets. These are assets that love volatility and uncertainty. They don't just resist market shocks, they actually get better and stronger when things get tough. These are the kinds of assets that have unique competitive advantages, intellectual property rights, or new technology. By investing in anti-fragile assets, you can profit from market disturbances and maybe even beat the market in hard times. For example, Mark Cuban, the billionaire entrepreneur and investor, is a fan of anti-fragility investing. He believes that anti-fragile assets are the ones that can disrupt and innovate in any environment. He advises investors to look for assets that have high growth potential, low debt, and strong customer loyalty. The next asset better than cash is an asset class that provides broad market exposure and long-term growth potential: index funds.
Have you read this book? If not, you're missing out. But good.
I'm gonna stop right there. Yeah, this wasn't. I didn't know about some of this stuff, and I want to, share it if you will. But I would say, like the man said, but what I did was take a little money that I made and spread it out. I didn't put all on one thing, all on the other thing. Just spread out. That way, if you put a little bit here, it won't hurt you as much. You have another access You put a little bit over here, just plant as you go. Get you some gold. That's what I did. I got $20 worth of gold, and start with small amounts. One site is called Vault. You can put whatever a small amount you can on there. Another site is a bullion. That's another site. The ones that I know about, and there's other ones out there. As far as crypto, coinbasecrypto.com. Also, I have a couple websites that I do for stocks. It's called Stash, and they charge like a dollar prescription. And Acorns, that's another one. So I got 5 plus. I put a little money on Fundrise, Ground Floor. One's called Happiness that I showed you, and there's another company. And I just put a little bit amount and start. That's how I start out, and then as you work, you can just put more and more and more in, and you get more and more dividends. So, but that's the way that you be able to survive the market. Basically, just start out with little. Don't put it all at once, and just spread it out. And start with something small. If it's under $1,000, it'll build up over time. And that's how those little small properties like Concrete and ones you get money that's constantly dividends that give you every quarterly. So that's true. So you got digital dividends. So it's worth a try. When no one did teach me this stuff, and no one in my family never taught me about this, none of my friends ever taught me about this. I had to go on the internet and find about stuff like this. I didn't even know about this stuff. So I encourage you, if you want to share it to people who watch this video, I want to share it with you because maybe this is something you didn't even know. That's how people gonna survive. And particularly, you're black, since you with all the trouble with business and everything, and if you want to continue to build sometimes a black Wall Street, you can do it behind the internet in different ways, and so you have generational wealth. So that's my way of showing you generational wealth. So if you got that kind of money, you spread it out. You got money when after you die, you have something to leave your children to. And then you got something that, if push come to shove, if you don't, and also have life insurance, and maybe one of those things that cover whatever insurance, so it won't fall back on your family. So I hope you enjoyed this video. Basically, some good information that particularly in the African American community, you definitely need to know. And like I said, ain't too many people ain't gonna tell you something like this or show you something like this. This the kind of thing we need to learn, because that's how these people are able to enjoy a good percentage. And these black people are doing it. There's some black people already doing stuff like this, but there's not enough of us don't know about it. And it's probably with other groups of people too. They probably don't know about it, but I want to share it with you. There's different ways, because you see the way the economy is. The dollar is falling. That's true. They were right. It's falling right now. It's not. It don't have no value. Then next month, which is July, they about to do some kind of changeover with money. So, that's what I would start doing. If you working, start putting away in these little small companies. That way in the future, the next 5-10 years, the economy goes south, plus you have something with your Social Security, or you have benefits. And this is what I was trying to tell my friend John, like, hey man, it's good that you got a pension and Social Security, but you still want invest in something like that so you have a nest egg. So you be sitting pretty wherever you go. Because that's how some people do. They got money coming in and out. And a lot of our people, we don't know about that. You know, some white people know about it. They don't want to share it with you. But hey, I had to find this out on my own. So I hope you enjoyed this video. Again, I hope it's been informative. You know, something positive to bring info from other websites. So, because up here, it's not always foolishness all the time. I like to have fun and stuff like that, but to really share something, because maybe somebody can, this is the problem, and this is a survival thing for you and your family, or individually, if you're married, you're single, whatever age you are. But start saving up now, because you don't know what the next 5-10 years is going to be like. You know? And like I said, nobody teaches. I won't care what the family. They didn't teach me nothing like this. You know? And they don't teach black kids something like this. They don't, you know, and kids in the city. So you got to teach your children, and hopefully they'll listen on how to be entrepreneurs, but not only take the entrepreneur, but know how to save, to live like the other counterparts, so they can enjoy and get out of the impoverished. And when you start thinking like that as a people, watch, you can keep up with the other groups of people. Alright, then I hope you enjoyed this video. Share it with somebody. Till next time, you guys be blessed. And yeah, please take the information, you know, share it with somebody, because some people don't know. And I hope this will help you in your financial future. And this is the solution. It was a problem. We see it was a problem, but I'm providing a solution. So, and you see, and that's something that when it comes to us internally, we got to work on how we do business with one another. I'll mention that in prior videos too. So hope this will give us an outlook and those who are in business, to give them kind of idea on the way they change it. And support your business, because when you support your business, you help your community out. And there's a lot, and right now the black unemployment is higher than anything. You know, the employment. So it's to your benefit and to your community. Think about it. Alright then, you guys have a good one. Not trying to be too luxury. Alright then, take care.